All right, hello and welcome to the sixth episode of season two of the RFC Tuesday podcast, the bi monthly show on the web where we invite the best and the brightest in the financial service industry and try to learn from their success and expertise. Tonight's episode: silver lining during a bear market, long term gains in a short term crisis.
And as always, we are the RFC accredited members of IARFCPH, whose passion is to educate the public about the value and benefits of financial planning. The IARFCPH is an association dedicated to the craft of financial consulting and is the sole organization authorized to conduct the RFC conversion course, as well as continuing education in the field of financial consulting. We are your host. I'm Andre Michael Labieres. I'm a stockbroker and a registered financial consultant.
I am Kuya Ryan Daes, a registered financial consultant, a chartered wealth manager, and registered estate planner.
So I'm Coach John Dizon, a registered financial consultant and a life coach from NLP Manila. Ayan. So springboarding from our last episode, Andre and Francis pointed out great views. And Andre mentioned that local equities natin are still expected to slide. With rising COVID-19 cases, tapos wala pa rin tayong clear vaccination program, investors are actually worried. I am worried. My clients are worried. Therefore, it's not a good time to invest and wait. While si Francis naman pointed out that if investment naman is for long-term requirements, then it's actually a good time to buy. We would like to see paano natin ba to ipagsasama this information to make it work for pera and mapera, especially ngayon na a lot of people are already asking kasi nasa decline na naman tayo eh. So, ayun ang ating pag-uusapan natin for this episode. But before that, we would like to congratulate first, ayan, may International Ambassadors Award. Si si Tita Arlene Baguyo, our IARFC PH Treasurer, and of course, our very own Kuya Ryan. Ayan. And of course, si Miss Grace, our executive producers. Meron silang International Ambassadors Award. Congratulations. You make us proud. The IARFC International Ambassador Award is bestowed on those members who have selflessly supported the IARFC mission through extraordinary efforts of time, service, and dedication. Our association was also recognized by IARFC USA for promoting and advocating the value of financial planning in the Philippines. The recognition was received by our esteemed President, Mr. Boyet Benavides, RFC.
Coach John, ikaw rin kailangan i-congratulate.
Yeah, yeah.
Palakpakan
Ay,
natin si Coach John because Coach John is now a certified investment advisor. Parang spy, no? CIA.
Yeah.
Which now allows him to sell UITFs to his clients. So, ano na siya? Licensed na siya. So, he can help
yes.
more clients invest now. Congratulations
Thank,
again, Coach John.
thank
Ayan.
you.
So,
Congra-
isa pang palakpakan. Okay.
All right. Congratulations, Coach. No.
Thank
Also,
you.
as usual, for our RFC members watching the show and people who are thinking about joining the RFC, basically all our audience. If there's anything specific you want us to cover, remember you can, type it in the chat box,
Down there.
your questions and suggestions for our next episode. Yeah, we'll make sure to cover it. So, I think Coach John gave out a really good summary of last episode, and trying to mesh this together. Uh, I think we really want to touch base now with our resident wealth management expert, the CWM, Kuya Ryan Dias. So, uh, to recap a bit, we were talking about uh, the concerns in the market. Just to add to that, unlike anything we've experienced in our recent history, the current economic crisis isn't something you can solve with more money. No, you can't just throw more monetary policies. Like the central bank, the government can't just spend its way out of this crisis. No, it's actually a health crisis. So how we actually respond to these policies on lockdowns, obeying the curfews, and actually getting vaccinated will have a tremendous impact on how fast our economy can recover. Okay, so this is what makes it unique, no, compared to any financial crisis we've experienced in the past. So to relate this to our episode, uh, what should Pera and Mapera do now, right? Considering their background, no? Pera is quite busy with his work, no? And his wife, I'm pretty sure she's also quite busy or not as technically proficient to actually make the direct investments herself, no, for the family. What should be done, no? And it's it's also a difficult time because the markets are declining even today. As of today's recording, no, uh, the markets actually dropped a bit, no, of a few hundred points. So Kuya, uh, should Pera and Mapera stop investing if the markets are expected to go down?
Okay. Uh, those are good points, Andre. And my view is they don't really need to stop. Maybe they just need to hunt more opportunities. The local market may be going down, but there are other markets that are going up because they have already implemented vaccination programs. Their economy has already opened up. So there might be opportunities that they can look at offshore. And the beauty nowadays is they're not restricted to local equities or local fixed income securities. They can actually look into collective investment schemes that invest offshore. So the beauty of that is they don't have to really invest online, look for a broker perhaps or an investment house that does it for them. They just simply need to look for local companies or locally incorporated companies that distributes collective investment schemes that have target funds perhaps or direct investments in other markets. So there might not be an opportunity locally, but they can explore that elsewhere. So we tackled that a bit last time, collective investment scheme. So maybe we could expound that further.
Yeah, please do so, Kuya.
Okay. Currently, here in the Philippines, there are two recognized collective investment schemes, the mutual funds and the unit investment trust funds. So the difference is, mutual funds are regulated by the Securities and Exchange Commission. And each fund that these mutual funds company put up are actually corporations. So when you invest in them, you are actually buying shares of stocks. So they would have a sales load normally, and they have a redemption charge after 6 months. So those charges would vary depending on each company. So the unit investment trust fund are investment schemes that are regulated by the Bangko Sentral ng Pilipinas. And they're normally distributed by either banks through their branches or new entrants like Manulife Philippines and True Life. Both are insurance companies who now have trust licenses from the BSP. So their distributors, their financial advisors are now capable of selling these UITFs as well. So what you buy in UITFs are units of participation. So yun lang naman yung difference, but they're both collective investment schemes. So they would also have a redemption fee if you withdraw within 30 days. So in terms of fees, medyo mas konti ang fees ng UITF versus mutual funds. But sometimes it depends on the distributor or perhaps the distribution channel from where you are buying it from. So yun yung dalawang collective investment schemes na available dito sa Philippines. Well, variable life can be a collective investment scheme, but primarily it's still an investment that has, or an insurance that has investment. So you cannot go without the life insurance benefit. So it has a place in a client's portfolio, but there's a reason for it. It's not really your main driver for growth because of the so many charges that are inherent to variable life. But it can qualify if you're talking about a single premium variable life policy, perhaps. But in 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 its intent and purpose, mutual funds and UITFs are more qualified as collective investment schemes.
All right, thanks for going deep on that. Before we actually talk about other areas or the practicalities of this, I'm actually quite curious. Would an ETF? Are you familiar with ETFs? I'm pretty sure everyone
Yes,
here is.
yes,
Yeah. Would an
yes,
ETF be considered a collective investment scheme?
yes. The only difference is you buy it through a stockbroker.
Yeah,
So
it's traded,
it's
right?
practically the same thing. So it's still a fund that has different underlying assets, normally equities. It could even be other securities, actually. And the only difference is instead of you buying one by one the stocks that are comprising that ETF, you're buying that one ETF already. So it's already a portfolio. In most cases, it tracks a particular index. And well, instead of you putting up all of the money required to follow a certain index, which would require thousands of sometimes dollars or pesos, you can go more retail with an ETF.
Yeah.
That's the beauty of investing in it.
Yeah, great point. And there's also this new product that actually emerged. I'm sure other uh, trust companies have already launched an international versions of these.
Mhm.
I'm actually referring to a real estate investment trust. Would that actually count as another collective investment scheme?
Well, somewhat yes, because normally a REIT would have different underlying properties as assets. So instead of you buying properties in bulk, so you get a portion of ownership of those different pieces of real estate being put in by the sponsor company of the REIT.
Yeah. Yeah. Thanks for discussing that. I'm pretty sure our audiences would be interested for us to actually delve deeper on these individual
Mm.
asset classes, right, or
Yes,
categories
yes.
now. But
I think we need another episode for that.
I'm pretty sure. I'm pretty sure. The point of me bringing these things up is that, Pera and Mapera could actually really use the information to know that, oh yeah, we have mutual funds, we have UITFs, we have REITs, and there's also the ETF. So now that we actually touched base now on the different categories of collective investment schemes now, where they can just put their money and actually outsource the investment side to a professional. Um, the next question would be, would these funds actually earn them money?
Okay. Well, the beauty of especially offshore funds, they would normally be feeder funds of target funds that have been existing for years. Like there's this particular REIT fund of funds distributed by a Canadian insurance, a Canadian insurance company through their trust platform. Uh, where the fund has actually yielded an average of more than 7% a year in returns because it has been existing before it was introduced in the local market. So if we're talking about offshore funds, chances are these have been proven working already. They have investment objectives that have worked where they originated from, and it's just being replicated here in the Philippines. Especially if it's tied into an economy that has been growing consistently. Like there are some funds that are tied into the economy of China. There are some funds that are tied into Asia except Japan. So there are even some funds that are tied into the NASDAQ or technology companies. So these have been growing for practically more than 5 years actually since I've learned about them. So there are opportunities out there that sometimes because uh, our local distributors are not aware of them or haven't distributed it, clients are not aware as well. So this is the beauty of what's going on with our country right now, with our economy. Things are opening up despite the pandemic. There are funds that you'll be surprised that actually earned last year. And some of them earned more than 50% actually. So you'll be surprised, di ba? So despite markets going down this year, kumbaga, meron kang mahahanap talagang pwedeng paglagyan ng pera. So you don't really need to stop. And I guess yun yung kagandahan ng medyo yung offshore yung investment mo since they've been existing for quite some time. Somehow, for people like me, I love doing things in autopilot. So I would rather, instead of picking the stocks myself, I would rather put my money in an investment fund. So this is where for sure, many of our viewers have heard about this strategy already. This is where the dollar or the cost averaging technique will be very useful. Because if we know that if these funds have already been churning out double-digit returns since it was conceived or since its inception, then chances are, even if there are volatilities and for you to pair to somehow bring down your risk, if you just invest consistently, chances are you'll get good returns in the long term.
Okay, Ryan.
Great.
I have
Yes,
a
Coach
question.
John. Sure.
Before we go to dollar cost averaging, are you saying this one I know kasi I have seen offshore already products of kumikita ba sila or hindi. Pero for the benefit of our viewers who are new to offshore investing, ano to, are you saying that these products are these investments hindi sila naapektuhan ng COVID kaya sila pataas pa rin?
Well, actually, they were. There were funds that were during the height of the pandemic, they were also down big time, but they recovered faster because of the way their governments handled the pandemic. China was the only economy, like what Andre pointed out last time. China is actually their GDP grew last year, despite the COVID-19 coming from them. Although the US did not grow much, medyo nag-decline yung economy nila, but still, many investments grew in the US because many of the technology that we're using now, like this Zoom account that we're using, came from the US. And worldwide, it's being used. So everybody's paying them up for subscription and they're earning. So that can be a driver of prices of these underlying assets or these stocks that are part of a particular equity fund that is that is being sold here in the Philippines. So it's possible.
Ganda,
It's possible. Yes.
Ang ganda kasi dati, I'm not sure if meron na siya dati itong offshore investing, pero ang ganda lang that knowing this adds an additional options for all of us.
Yes. Actually, Coach Jan, if I may add lang, ang maganda nga ngayon, na-i-introduce na rin yung mga offshore funds wherein you can invest in peso. You don't have to use US dollars to invest in them.
Nice.
So, kumbaga, talagang dumalapit na sa masa ang mga investments offshore. So there are opportunities here. You just need to find them.
Yeah. Those are great points now. Just a caveat now for our listeners. any of the investment products, stocks, asset classes that we actually mentioned in the show should not be taken as buy or investment recommendations. We believe it is best that you actually touch base with your advisor who best knows your personal circumstances. So I'm just laying it out there so that you won't take it as an investment recommendation because we're talking about it.
Right.
Yeah, I think those were great points, no? Especially the part about Zoom. There are sectors that actually benefited, in fact, from the pandemic, especially anything that relates to, work from home or, like remote, remote conferencing and anything related to that. So I think we're at the point where we should actually look at or actually delve deeper, right? On cost averaging.
Yeah.
Yeah, yeah. I think we should delve deeper on that.
So
Yeah. Kuya Ryan,
let's
ano ba
define
yan?
let's define what is cost averaging. So basically, cost averaging is an investment strategy wherein you just consistently invest on a regular basis. Well, ideally on a monthly basis, because prices of assets go up and down normally, di ba? Especially now, it's actually on a downtrend. So you wouldn't know if you would really earn when you invest. But since we're talking about collective investment schemes, it's easier to implement cost averaging in collective investment schemes. Since they're already professionally managed, the only reason why these funds would go down in value, it's because there's really something big that happened in their particular part of the world. So the beauty of it is if you don't have time to monitor, like halimbawa si Miss Mapera, hindi siya masyado investment savvy. Si ano naman, si Mr. Pera, laging nakatutok sa computer niya dahil may online meeting. Dahil ano siya data analytics expert eh. So laging nagka-crunch ng numbers yan. Pero ibang numbers ang kina-crunch niya, hindi investment numbers. So doing this strategy would somehow make sure that they limit their risk, and they buy high, they buy low. So even if they bought high, since they bought low, medyo mapapababa nila yung acquisition cost nila nung investment na binili nila or kinuha nila. Kasi in the long term, you would see that most of these funds would really grow. So regardless of when they started, if they just keep on investing consistently, buying units or buying shares on a regular basis, so even if they bought high, because they bought low, bababa yung presyo nila eventually. And then dahil tataas naman yung value ng assets dahil maraming bumibili nung shares at gumaganda yung value ng companies na laman nung fund na yon, it would just grow in the long term. So mas mapapalaki yung kita nila. So siguro just to drive a point on this, I'll share my screen on simulating a particular investment in a local equity kung one time, and then kapag nag-cost averaging yung si Pera at si Mapera. So let me share that now.
Oh, maganda yan. Para makita natin yung numbers
Oo.
mismo.
You see my screen na naman, no, guys? Okay,
Yep.
so you would see here, if for example, medyo nilitan ko lang para lang hindi ma-overwhelm ang mga tao. If Pera or Mapera invested 115,000 in a local equity fund back in May 23, 2019. By now, lugi sila. Kasi down yung investment nila to 99,000 pesos. Because down nga yung market eh. So this is simulating a one-time investment, and these are actual unit prices of a fund. Hindi ko na lang i-mention kung anong company to. So let's show the next slide. So ito, instead of investing one time, nag-invest ng 15,000, tapos 5,000 consistently, until, kung mapapansin nyo, inabutan nito yung pandemic. The lowest point you would see is back in March. March 2020. Yan yung lowest point. Wherein the unit price became 0.6313. Of course, the daily prices would still be different, but this is assuming after the 15th naglalagay ng pera or ng investment si pera at mapera. You would see that the losses are not as bad. Instead of 99,000, close to the capital value yung fund value nila. So, had it been a different day, actually, baka up pa to eh. Kung mapapansin nyo, yung 21st investment nila, actually up na sila. Kaya lang bumagsak yung market ng February, di ba, Andre? Yun yung pinag-usapan natin last episode.
Yep.
So, you would see that if you invest consistently, you can never go wrong. Kasi bumibili ka nga ng units or ng shares consistently. So, yun yung effect ng cost averaging. So, you would see here, it really works. So, let me share a different, a different slide. Sandali lang ah. I'll stop sharing for a while.
While we're waiting, I think it'd be interesting for us to actually discuss the mechanics of how someone actually earns from investing in collective investment schemes. Because if we were to compare it when you're investing directly in a security like a stock or a bond, you make money from two ways actually. One is the income side. Bond would pay you interest. Some stocks, okay, not all, some stocks pay dividends.
Correct.
It could be in the form of cash, or in rare cases, they could actually give you a special dividend, which could be in a form of a property, like a stock in another company, or when you actually sell them the security at a higher price. So how would this work for a collective investment scheme? Let's say a mutual fund, UITF, a REIT, or an ETF.
Okay. Collective investment schemes, the way they work is its unit price or share price would depend on the market value, the current market value of the underlying assets. So if the fund manager were to sell it today, so if prices are up, then the unit prices or the share prices would go up as well. And if those stocks where the funds are invested would declare dividends, then that would form part of the unit prices or the share prices of those particular funds. So it would add up to the value. So there are some funds actually that are based on REITs that pay dividends depending on the company. One of the funds that I'm tracking, it pays out dividends semi-annually, every January and July. So they collect because it's a REIT fund, they collect the rental income, they deduct the cost of doing the business, then they share the rental income every 6 months. And the amount of dividends that you earn would depend on the number of units or shares that you own. So, which is why last year was actually an opportunity because prices are lower because of the perceived value of the underlying assets, the properties. So it would give you an opportunity to buy more units and then gain more dividends perhaps. So whether it be based on fixed income, it works the same way. So it would be based on the market value of the assets. So if the fund was able to buy fixed income that have good interest earnings, their coupon rates are high. If interest rates of securities or fixed income securities are going down, it would price up the value of it will improve the price of the fund. So that's how you earn. So even the future coupons that you're supposed to earn palang, napa-price in na present value siya nung fund. So which is why sometimes some fixed income funds would earn better than if you price them now compared to some direct investments in fixed income securities, because they're buying bulks of fixed income securities as underlying assets. But of course, if it's the reverse, meaning like what we discussed last time, uh, the funds hold more short term and then, or perhaps long term, but lower coupon rates of fixed income securities, then if interest rates would go up, then the value would go down. But eventually, that's the beauty of having a fund manager. You don't really have to worry much about when to buy or to sell. If you just buy consistently, then you're good to go. If you implement a dollar cost averaging, because buying a fund doesn't require you to buy as, like if you buy treasury bonds of the government, there's a minimum value that you have to put in. I think it's 1 million, if I'm not mistaken, unless it's a retail treasury bond. So you don't need to buy as big as 1 million in face value to be able to invest in participate in such assets. That's the beauty of investing in collective investment schemes like UITF and mutual funds.
Yeah, great points. Great points, Kuya. But I guess if we're actually talking about this for the average Filipino, it is definitely more affordable, bite-sized, right?
Yes,
So apologies for the segue, but thanks for
it's
providing
okay.
clarity for our audiences, right? So the floor is back. No,
Okay, so let me share this next slide. So you would see here this, the difference between the first slide and the next one is this second slide shows an investment, same amount, same period. So the client started off with 15,000 and then 5,000 monthly, but this is invested in an equity that is being invested in China. So you would see here 115,000 is the total amount of capital that was put in over a period of almost 20 months. Then the value of that investment is, instead of a loss, it's 184,000. So this is the value of having offshore investments that are bought locally. So you have options that you could look at that are not available, that were not available before. So it presents another opportunity for people like Pera and Mapera. So this is dollar cost averaging or cost averaging technique. Uh, there's a step further, actually, wherein if even with local equities, kaya pang pakitain even if hindi sila, kumbaga, even if sa local, kayang gawin yan. And it's called modified cost averaging na technique. So what's the difference? Di ba yung cost averaging, you invest a consistent amount. When you're doing modified cost averaging, that means when you see an opportunity, meaning mababa, and normally this is when a financial consultant would help you best. Kasi mas nakikita to ng financial consultant dahil somehow binabantayan rin ang nangyayari sa mga markets ng isang financial consultant. So when prices go down, you invest more. It could be double, it could be 3 times the usual monthly investment that you're doing because you see an opportunity. Especially if the client has excess liquidity, sometimes there's a need for them to shift assets. So remember in our course that we measure our liquidity and our solvency ratio, etc. Diba? That's the purpose of knowing those things. If the client is readily capable of shifting assets because their assets, their portfolio is very liquid, then these are opportunities that they may want to get into. So tulad nito, nung early parts ng pandemic last year, yung March, April, and May were the lowest, were the times na mababa ang presyo ng lahat ng funds, actually kahit offshore. You would see na nagdagdag ka lang naman ng 30,000 pesos sa capital mo instead of 115 spread over 3 months. You would see the big jump in returns. Actually, from this is the invested in China. So kung with the China equity fund, kung dati ang return rate would be 42, ito magja-jump ng 49% yung annualized return, which is a bit mind-boggling, 'di ba? But let's look at local kasi hindi naman pwedeng lahat, 'di ba? Lahat offshore. So let's look at the local side. Look at the local side. Ganun din. So you would see, imbis na malugi, 'di ba, nung consistently nag-invest lang yung client, cost averaging lang 'yon. Nung nag-modified cost averaging siya, nagdagdag siya during the times na mababa ang presyo ng fund. Ganun rin, 15,000 pero nadagdagan, hindi lang nung March. Kasi like late last year before December kasi biglang nag-shoot up yung local equities. 'Di ba? Naka-invest pa siya dahil bumaba ulit eh. Look at the price trend from 0.73 bumaba na siya to 0.68, 0.67. So halimbawa, in-advise siya ng financial consultant, magdagdag ka kasi may opportunity. You would see na nabawi na niya yung capital niya at kumita pa. With a total of 165,000, you would see naging 174,000 yung portfolio ni Pera at Mapera kung ganito yung gagawin nila. So it doesn't mean that you have to stop. Sometimes you have to tweak your strategy along the way, which is, I guess, the purpose of a plan review with your financial consultant to see where the portfolio is headed. So you work with your financial consultant when these things happen. So yun lang. So that's it. That's what cost averaging is all about.
Okay,
Whether it's
thank
cost
you.
averaging or modified cost averaging, it will help the client.
Correct. Thank you, Kuya Ryan. I would like to say that caveat again, what Andre said earlier, this is not something that would tell you to buy or to sell.
Mhm.
Okay, so this is just to show you a point of how cost averaging works. It's better pa
Correct.
rin na you talk to your financial advisor because he knows the best for you. And of course, from the previous episode na pinag-usapan, I think it was Francis who said na checking your risk profile pa rin. Ano yung
Correct.
babagay sa
Mhm.
risk at diba? I would like to yung kanina sa site na nakita natin, even yung sa China, yung sa offshore, makikita natin nung March bumaba rin yung units niya. So actually, hindi mo rin this offshore thing, it's just another option for you
Mhm.
guys to think about na meron palang option to invest offshore, 'di ba?
Correct.
And you can also follow this cost averaging technique even here in the Philippines. Mas maganda nga yung modified version, 'di ba? Yung tuwing mababa, mas malaki ka naglalagay. So ang question ko naman diyan is um, actually I have a client talaga, no. I would like to ask this to Andre. Kasi I think may nabanggit ka during the previous episode na yung timing the market versus time in the market. Although maganda yung cost averaging, itong kliyente ko to, gagawin niya yun, pero hindi niya alam. Parang urong-sulong siya, pababa, dito na ba yung time? So hindi siya nagsa-start up until now. So what can you say about that?
Yeah, that's a great point, Coach. As a a stockbroker, trader, portfolio manager, we experience questions like this all the time, right? When do you time the purchase? Um, the thing is, nobody has a crystal ball, right? Nobody. If you can't predict the future, I mean, come on, right? If you can predict the future, you'd be uh, the greatest investor of all time. And talking about the greatest investor of all time, uh, look at Warren Buffett, right? Many would consider him as one of the greatest investors of all time, but yet he still makes mistakes, right? He can't perfectly time it. He's been doing this what? He's like uh, 80 plus now. He's been doing it his entire life, yet his timing is never perfect. Or if we talk about Paul Tudor Jones, he's also one of the world's greatest traders. He's a billionaire from trading. Okay, and he can't perfectly time it, right? there are times where the timing is off. He buys too early or he sells too late. And in my case, I've also been trading since I was 18, and I'm about to turn 30 this year. So, like you can imagine that I've been doing this for a long time. I can't do it perfectly, right? So I think I think we have to go back to that client's specific case, specific scenario. Why is he investing in the first place, right? Is he investing just to make a quick buck, or is he investing because he wants to achieve something in the long term, retirement, whatever? So we have to go back to the plan, right? And when we match the plan with the appropriate asset class, okay, some asset classes perform better depending on the time horizon. Some let's say if your time horizon is short term, you're better off putting your money at time deposit or a digital savings account because they pay quite high rates nowadays. Um, so if you time their objective with with their with the right asset class, then the client could achieve what he wants. But if he wants to time the market just for the sake of making a quick buck, I think that's an impossible thing. you know so I hope that answers your question, coach.
Right, right. Oo. May isa pa akong actually question
Sure.
eh. Merong gustong mag-cost averaging. So again, for our viewers, magtanong lang kayo if may pahabol kayong question, uunahin namin yung sagutin sa next episode namin. So my next question is, I have a client, gusto niya mag-cost averaging, pero during that time, biglang bumagsak. So I'm actually recommending na this is a good time to buy, right? With the modified cost averaging, di ba? We've talked about that. Pero, syempre, itong kliyente to, takot na siya na yung lahat ng nilagay ko nalugi na eh kasi bumagsak eh.
Mhm.
Di ba meron such thing as paper loss? How how do you relay it to the customer? Paano mo ginagawa yun?
Okay, is that just to me, or
Anyone?
can Kuya
Yeah.
answer this? Okay, so um, first of all, I don't think we've covered this in the last episode, but I've done some research, on this, uh, because you said that everything you've recommended went down, right? There's this view, or there's this understanding in our industry. We say all correlation goes to one in a crisis. It sounds kind of technical, but it really just means that when there's a crisis, everything goes down. Okay, when the COVID pandemic hit, you saw that everybody investing in the markets would have seen in March last year that everything just dropped,
Yes.
from cryptocurrency to equities to bonds, even real estate, right? There's
Even
all
gold.
real estate.
Even
Yeah,
gold.
yeah, gold is a safe haven asset. It also fell. So, and I actually wrote a research piece on this. All asset classes fell. So correlation is one. So like everything fell. And you can't blame yourself for that. Nobody has a crystal ball, right? So when that happens, happens. But in my case, how I would see it is, we RFC practitioners, one of the greatest points of value that we offer to our clients is education and helping them stick to the plan. The plan is for them to accumulate assets. In that case, no, in your client's case, to accumulate assets so that they can achieve their goals. We have to basically convince them. Okay, that's one of the ways we can do that. All right. I think one great way is to use the concepts in behavioral finance, nudging. I think this is an important topic to touch base in the future. But instead of having to have this conversation again and again and again, you can actually set up a system which nudges or pushes your client to do something without having to really think about it. So you could automate it, right? I have a client who is accumulating wealth for her retirement, and one solution we found, because her specific case is she's a very busy entrepreneur. Okay, so uh, getting hold of her is very difficult because she's on the phone all the time or in a meeting. So you can't just tell her, okay, it's time to actually add to your portfolio. It's pretty tough. So the solution we found was, uh, in her bank account, we set up an automatic debit arrangement, which would automatically just deposit an X amount of money into her stock brokerage account every month on this day. Every month. So we've automated it and has allowed her to actually accumulate, assets over time. And I think that's one solution, right? Uh, you can automate it so the client doesn't have to think about it. Most of the time, they're too busy to actually bother. Yeah, I think that's a solution you could try, right? Instead of having to have the same conversation again and again and again. What about you, Kuya?
I'm muted pala. Sorry. Anyways, what I'd like to share is what I normally do is I would prepare them before they even start. So since I've learned about the global financial crisis before, the what happened before that, how it precipitated, what happened afterwards, and then uh, when I've also read about the Asian financial crisis, I learned about it. And then you would see that in history, a pandemic happened practically 100 years ago. So what am I saying? I always tell my clients that history practically repeats itself. Nag-iiba lang yung kwento medyo nagbabago ng konti yung kwento, pero nangyayari ng paulit-ulit. Like pandemic can happen 100 years from now because of people commingling, traveling from one place to another, di ba? So it can happen. And the same thing happens with investments. It will go up, it will go down, but when a black swan event happens or a pandemic like this happens, eventually it will bounce back again. And what I learned from history is when markets bounce back, they normally bounce back higher than the previous high because there are more people pouring in money. And dumalaki yung population natin, there are more consumers, there are more companies being listed. So all I'm saying is, since markets are cyclical, when it drops drastically, it sometimes goes up drastically as well. Because when people already spot the opportunity, there's a herd mentality, di ba? Papasok rin yung pera or lalabas ulit yung pera sa merkado. So you would see that if you just invest consistently, you don't mind these things, you will actually make a lot of money in the long term. You just invest consistently and work together with your financial consultant where to put in your money at the time that you're putting it. Or perhaps kung naka-auto debit yan, kung may arrangement kayo na pwedeng i-modify nung financial consultant mo yung allocation ng investment, then you do so. Basta meron kayong ganong arrangement. So, it happens. We can do that now because tama si Andre, ang dami ng technology that can help us. There are many investment companies that also already provide that online portal to do the investment. And if you have the right bank partner, your personal bank partner, if they're accredited with that investment company, you can even make an automatic debit arrangement to invest regularly to your investment account. So ang dami ng ways. And if you just give people the confidence na this will blow over eventually because governments would do something about it, people would find a way to earn pa rin kasi hindi naman pwedeng hindi kumita dahil may pangangailangan tayong lahat. Gagastos pa rin tayo. So those companies na makikinabang sa paggastos natin because may pangangailangan tayo, tataas pa rin yung value ng stocks nila eventually or nung mga securities na binenta nila para makakuha ng capital sa public. So if investors are aware, especially if they're first-time investors or people who don't know anything about investment, if they know these things, they're prepared for it, chances are when these things happen, they see it as a buy opportunity instead of woe is me, it's the end of the world thing. So it's the job of the financial consultant to do that. And if we were able to do our jobs right of educating them, they'll be happy when these things happen. Of course, they're not happy because people are dying, but they're happy because they know that they can make money out of it. Well, that's my point of view.
Right, right. Oo. Tapos ang kaganda, I was thinking kasi parang kanina while you were saying, kasi kapag sa amin sa UITF, you would have to ask the client ulit, may procedure kumbaga. But if you go direct to a broker, parang for example, broker ko si Andre, parang pwede kong bibigay sa kanya yung buong etong lump sum, o ikaw na bahala mag-manage niyan, ikaw bahala kung kailan ka maglalagay, yung gano'n, di ba? Do you do that, Andre?
Yeah, that would be called a discretionary account. There's regulation on it. There's compliance. Yeah, because there's a risk. Okay, let's talk about how someone makes money out of this. Let's say if you would invest your money in a mutual fund or a UITF, the firm charges management fees, right?
Right.
And that's how they make money. So their business model is based on accumulating a lot of assets. For the broker, it's a different story. For the stockbroker, we make money from the transactions. So if a client deposits money once, buys a stock once, and that's it, the broker only makes money once when the client bought. Okay. So if you actually entrust your money to a stockbroker to manage your portfolio, there is a potential conflict of interest there. You can imagine, right? I can buy a stock and then sell it right away, and I make commission two ways.
Mhm.
So to avoid churning, that's what we call it, churning. You're basically buying and selling a lot, and then the client ends up losing money, but the broker can buy a yacht. uh, right? So
Right.
to avoid conflicts of interest like that, there are specific or special accounts. And it's called the discretionary account, and there's a lot of paperwork on that. So yes, it can be done. You can entrust your money, and there are ways we can structure it to make sure there's no conflicts of interest. Remember, in the RFC Association, we value ethics, right? The value
Yes.
ethics is one of the most important
Correct.
areas that we actually look at, and setting it up right, like Kuya said with his clients, he educates them ahead. Setting the account, setting the client up right is of paramount importance. So thank you for the question, Coach. I think that was very valuable for our audiences. And
Right.
talking,
And it's
mm,
it's actually an additional option for our clients as well to do
yeah,
that.
exactly. So it's more
Correct.
customized also, instead of a collective investment scheme where it's like buying an RTW or ready to wear, like one size fits all. But in this case, you can
Right.
fully customize it. It can be done. Um, so talking about our audiences are RFC members, are other practitioners, and people who are actually considering to become an RFC practitioner. And one thing that our association really pushes forward is practice management, right? So in the sense of practice management, we look at the application side. So how do we actually uh, put this concept, the concept into practice? Okay, so this question is addressed to Kuya Ryan, our resident wealth management expert. Uh, so if you were a starting RFC,
Mhm.
what would be the best way for you to introduce the concept of cost averaging to your prospects and clients?
Okay. Uh, of course, the best way, you mentioned it a while ago, is to really leverage on technology. Um, Most investment accounts, especially if they're collective investment schemes, would actually allow for an auto debit arrangement. And if you do that at the beginning, put it on autopilot, you just consistently invest. And then perhaps if there's just an opportunity, you just call up the client, you need to put in more money. So that could be, some companies call it lump sum top up. So you can have a regular top up, you do it consistently based on your objectives, and then when there's a there's a drop, a sudden drop in prices, you call up the client, invest some more, so that they can buy more units or shares. That's what we can easily do for our clients. And Since in most cases, financial consultants, RFCs are most of the time distributors of investment funds as well. They can monitor prices and they would have a better eye if markets are going down or going up. So they can easily call back the client. Now is the opportunity that we are waiting for. And then ako, what I do as a step up, I actually customize a dashboard for each of my client so that I would also see it more clearly what's going on with their portfolio. I even have an Excel sheet of fund prices so that if I see that if there are measurements that I'm waiting for, if it's an opportunity to buy in, I tell them to buy in. So we can leverage on technology, and the beauty of our course is they teach us to maximize Excel, Microsoft Excel, or any spreadsheet for that matter that works for us, so that we can help our clients. Actually, another thing that we should advise our clients, or at least what our RFC should be doing, is we go back to the financial plan, because when in the financial plan we know how much funding is needed for education, how much funding is needed for retirement, and then from there you'll already have an idea what you could play with for the client. How much money, actually na-determine mo na nga rin doon anong klaseng assets yung paglalagyan eh. So from there, you can have a good asset allocation strategy already, so that you would know how much money is going to be put in equities, how much would be put into perhaps offshore equities, how much would be put into local fixed income securities or fixed income funds or whatever, and how much would you put even in exotic asset classes na baka kumita ng malaki in the long term, 'di ba? So because you already have target points. And what's also important is we never forget to rebalance the portfolio of the client so that they don't, 'di ba? This is going back to their risk appetite eh. If you see one asset class performing too much, that means that the client is already getting into too much risk. So if it's time to rebalance because you're practically overachieving the targets that were set when the plan was made, then you tell the clients or you help the client rebalance the portfolio to preserve income. Hindi naman pwedeng all the time palaki lang ng palaki yan. Of course, if you see that there's an opportunity to rebalance already because you might be seeing some risk happening in the long term or in the near term, like what if you already earned before 2020, kumita ka na nung February? Eh di syempre, ang sama ng loob ng kliyente mo kung bumagsak yung portfolio, di ba? Kung ang kliyente magko-consume na nung kanyang fund, then you better do that rebalancing. But if the client is still quite young, like 5 years pa lang yung funding niya and 20 years to go or 25 years to go, then the client can still wait it out. Pero kung if the client is nearing the time when they need the money already, they're already turning 60 next month, eh kung na-overachieve mo na yung target, it's time to rebalance. So, dapat sa atin nanggagaling yon, hindi dapat sa kliyente. Kasi ang kliyente, habang nakakakita ng kumikitang pera, they will just drive at it. It's our job to help them rebalance the portfolio so that sa atin rin kasi puputok yon if we don't do that. Eh. Tayo dapat yung voice of reason in everything. That's why we're being paid as financial consultants.
Excellent point, Kuya. Well, there was a lot of things that our audiences, I'm sure, would very much appreciate. Given the time to digest all the wisdom you've given. Talking about this, you were mentioning earlier about rebalance. Having this idea of when to rebalance, and then you also mentioned earlier, about how they can, when is the right time for them to rebalance. And this is actually connected to the modified DCA, right? Modified cost averaging strategy. So my question here is, as let's say, for example, I'm a starting RFC practitioner, how would I be able to know it's the right time to actually tell them, actually this is an opportunity. You should buy more. Because that's what the modified cost averaging strategy is. When at a certain price level, you can say, okay, this is the right time for us to add. So how do you know it's the right time to add more?
Actually, I'll answer back what you answered a while ago. Nobody holds a crystal ball. But when you see prices of assets really very low than it used to be, like you saw a while ago that there was this fund that normally most funds would start at one, right? Or a par value of one. Of course, when you see prices going down lesser than one, that's always a buy opportunity because you're buying lower than the par value. But when you're seeing prices closer to 50 centavos, but it never reached that before, that's really an opportunity. Sometimes, ganun kasimple lang. You don't need to overcomplicate things by looking at so many things. But yung like most people in the stock market industry, mga stockbrokers, you look at P/E ratio, right? So it's possible that you can use the P/E ratio of an index of where the fund is invested. If you see that P/E ratios, kaya lang medyo technical to, would be lower than usual, then that's a buy signal. But ako, bottom line, if you see the portfolio dropping at -10%, -15, then that should be a buy signal to buy more. Or that should be a signal to buy more units or invest more money. Kasi especially if you've seen the fund growing by 20% before, so it's unusual that it goes down by 15%. So that's a simple strategy that our RFC members can look at.
Yeah, I think that's a great point. Just to add to the wisdom you've shared, uh, it's really basically a mean reversion strategy. Yes, sorry for the technicalities, but the idea is that when it drops, it will eventually go back to its normal or
Yes.
average level, right? To add to this, yeah, I think this is one of the benefits of a collective investment scheme compared to an individual security, because the fund managers are working hard to make sure the fund will generate returns. Whereas if you just buy a stock and it dropped, it could have dropped for any reason. Okay, could be the business is really going bad, right? And if things are really going bad and there's no turnaround, there's no way the company can change the situation, then it's not going to go back up. So this is the benefit of professional management, because they will be making sure that the assets that your fund holds are actually the right kind of assets, because there's so many ways that you can actually, there's so many indicators that you can use to time things, right? So in terms of applying modified cost averaging, you could use technical indicators, you could use fundamental indicators. The fundamental indicators would be like earnings. Technical
Correct.
indicators would be like, the price averages and the like. So yes, it's a deeper, a topic for us to dive into. um, and I think that would be a great way for our members to learn, like we do continuing education, and it's very
Correct.
important for our members to participate so they can acquire more tools, learn more strategies. And
Correct.
yes, that's why you should you know follow our social media accounts, so you can make sure that you won't miss any updates and the like.
Correct.
So so yeah so just we're already reaching near the end of our episode. So just for the benefit of our members, I would like to give a short summary, of the things we discussed. uh, Kuya Ryan introduced a very useful concept. It's called dollar cost or peso cost averaging. You uh, you invest a fixed amount of money at set intervals. Say, for example, 5,000 pesos every 15th of the month. Every month you do that, and again, yeah, that helps your client to accumulate uh, wealth at a relatively lower risk, because compared to putting all of your money in one go, the volatility, the the risk that your account, your investment would experience will be at a much lower degree because you're putting small bits at a time. And as we've illustrated earlier, there are different ways you can implement that. And that's what we would call the modified cost averaging strategy, where you could buy more, at lower points so you can get a better yield. Okay. And then, so aside from that, we also talked about the practice management side, like how you can implement this. And I think Kuya made a really good point about leveraging technology because there's so much technology available to us nowadays. You can automate these investments so you don't have to have the same conversation with the client again and again. You can just automate it, fire and forget. Another is you could set reminders. You could nudge your clients using uh, services like Mailchimp,
Correct.
automated emails. There's so many ways. And finally, I want to emphasize the part where you need to follow our social media accounts so that you will know if there are any upcoming continuing education, so you can better equip yourself uh, with new tools or developments in theory and in practice, so that you can improve your businesses and serve your clients better.
Correct. Great.
Right. Thank you for the summary, Andre. And thank you so much, Kuya Ryan, for giving us all of those nuggets, golden nuggets. I mean, ang saya-saya lang that people can now really diversify things. Again, you don't have to stick to one thing. When doing investment, you can actually diversify. You can do offshore, yan, may broker tayo, UITF mutual funds, etc. Hindi porket ito yung nag-work sa'yo, hindi mo na pwedeng i-try yung iba, di ba? Tulad nga nung during our meeting prior to this recording, one of the things that Miss Grace said was saving and investing should be a habit, not an option. 'Di ba? Sana naman for all Filipinos, it's a habit, not really an option. Na parang nakakaangat ka kapag when you can do this. Actually, we want to make it for everyone. Na saving and investing, habit na yan. Sa loob na natin. Parati na siyang ginagawa. Um, Again, if you don't have any financial advisor, feel free to reach out to any of us. But again, contact your financial advisor so that you can get to know more. If this one is too much for you, they can break it down for you. Like what Kuya Ryan said, babalik yan ulit sa financial portfolio. Ang sa RFC kasi, gumagawa kami talaga ng book. It's like a thesis book for our clients na very personalized and tailor-fit. We did this course and cum laude kami lahat because we want to better our craft para we can serve our clients better. Again, bumabalik siya dun sa portfolio na yon, financial portfolio, because it's personalized, nandun na lahat ng goal, para alam mo when you're investing, alam mo bakit ka nag-i-invest, for what goal is that, may targeted. Like what Andre said kanina, ano ba yung time horizon yan, hanggang kailan ba yan, nagmamadali ba siya, tama ba yung vehicle na papasukan niya, all will revolve around that financial portfolio. Okay? So, and if you are getting a lot of values, we're not getting paid here to do this. But if you are getting a lot of value, we're just sharing this freely to everyone. Please share us to your friends as well. If you think na mas makakatulong to for their lives and for their families, share us, please. Ayun. And to end, again, it is better to be in the know than to be the last to know. Goodbye, everyone.
Goodbye. Stay safe.
Bye bye. Bye. See you
Thank
again.
Don't get infected. Good night.
Good night.